Did you know that 61% of Healdsburg home purchases in 2024 weren't primary residences? I mean, this fascinating statistic reveals a lot about our unique market here in wine country. So I'm David Hargreaves, and after analysing the latest market data for 2024, I've discovered some key trends that could make 2025 a pivotal year for Healdsburg real estate. So whether you're considering a second home in wine country or looking to invest in our luxury market, what I'm about to share might completely change your perspective on your timing and making your move. So before we dive into what's coming in 2025, let's take a look at how accurate the major real estate platforms were with their 2024 predictions. I mean, it's actually quite fascinating because while they got some things absolutely spot on, they completely missed the mark on others, especially when it comes to Healdsburg's unique market. So let's start with what they got right. So the experts at Redfin nailed it when it came to interest rates, correctly predicting they'd hover around 7% in early 2024 before dropping towards 6.6% later on in the year. And that was definitely the relief that many buyers have been hoping for. And then both Redfin and Zillow also accurately forecasted an increase in sales volume, predicting rises of 5% and 2.3% respectively. But here's where it gets really interesting. I mean, they completely missed the mark on home prices when we start to look at different segments. Both platforms predicted slight decreases, with Redfin forecasting a drop of 1% and Zillow projecting a 0.2% decline in the price of homes. Instead, in the sub 2 million market, prices actually increased by 7% in Healdsburg. I mean, in Q4, Healdsburg prices actually jumped 11%. The luxury market was definitely more in line with those national predictions, dropping back 1.3% when compared to 2023. I mean, when you compare this to the rest of Sonoma County, you start to see just how unique our market is. I mean, we have more inventory options, higher price points, and longer selling times, yet we're still maintaining strong property values. And while our overall market might look quiet with just a 1.2% increase in sales compared to Sonoma County's robust 10.4%, this headline really does mask a fascinating story of market divergence that could signal some interesting opportunities for both buyers and sellers in 2025. So 2025 is shaping up to be an incredibly interesting year for buyers and sellers, and I'll show you exactly why just in a moment. But first, let's break down Healdsburg's numbers in a little bit more detail. One of the most significant shifts in 2024 was the welcome return of inventory to our market, and the numbers here tell a compelling story. New listings actually jumped 17% compared to the previous year, significantly outpacing Sonoma County's 11% increase. And the fourth quarter was particularly remarkable, showing an 80% surge in new listings compared to the fourth quarter in 2023. And then the luxury market led this trend with an impressive 25% increase in new listings above $2 million. Now, while we saw 126 homes sold between January and September, a 5.3% decrease from 2023, this number makes perfect sense when you understand our market's unique character. You see, Healdsburg isn't your typical real estate market. Most of our buyers aren't looking for primary residences. They're seeking either second homes or investment properties in wine country. So this brings me to something else which is fascinating about Healdsburg that I don't see many people talking about. But before I share that, I'd love to hear your thoughts. I mean, what are your questions about the real estate market in 2025 and what's likely to happen? Definitely drop them in the comments below. And if you want to stay up to date with everything happening in Healdsburg and Sonoma County real estate at large, make sure to hit that subscribe button. It also really helps our channel. Now let's talk about what really makes our market unique. I mean, we're actually seeing a tale of two very different markets here in Healdsburg. The divide between market segments grew significantly in 2024, and the numbers really are quite revealing. In the under 2 million market, we saw sales increase by 8% year over year, while prices appreciated 7%, dramatically outperforming Sonoma County's modest 0.6% increase. And what's particularly interesting is that 60% of new listings in this segment successfully sold, with faster market absorption and more predictable selling times. The luxury market over $2 million tells a different story. Sales actually declined by 17%, and prices fell by 1.2% compared to the rise in the under $2 million market, which is also slightly worse than Sonoma County's 0.7% decrease when you look at Sonoma County properties over $2 million. And what's more, only 40% of new listings actually resulted in sales, and properties took 44% longer to sell on average, taking 95 days on the market. We definitely saw more volatile pricing patterns, although core locations remained relatively stable. But here's what I find most fascinating. Like many previous years, sales were dominated by people purchasing properties that weren't primary residences. 61% of all purchases were non-owner occupied. And when you look at rural properties, this number jumps even higher. An overwhelming 76% of properties were purchased as non-primary residences. Meanwhile, homes within city limits were pretty much 50-50 primary and non-primary residences. And then speaking of rural properties, here's an interesting detail. These homes commanded 74% higher prices than city properties, which, is probably to be expected because a lot of those properties also have a lot of land. And while you might assume most of these non-primary purchases came from San Francisco buyers, the data tells a very different story. Surprisingly, 31% of non-owner occupied homes were bought by people already living in Healdsburg, while only 13% came from San Francisco buyers. The performance gap wasn't just about price points. Location played a crucial role. Downtown properties maintained stronger pricing power, while rural properties showed more price sensitivity. And then turnkey homes significantly outperformed properties needing updates, and also properties that are closer to town saw stronger demand regardless of the price point. Okay, now that we saw everything that happened in 2024, what can we expect for this year? All of these market dynamics from 2024 set the stage for what's coming in 2025. And I have to tell you, there are several factors that have us cautiously optimistic about the year ahead. So let's start with the sub $2 million market, which we definitely expect to continue outperforming Sonoma County. We're particularly excited about the outlook for turnkey properties in prime locations. So what else is driving this optimism? I mean, we're seeing growing demand from second home buyers and pre-retirees, and with improved interest rates, we expect this to support continued price appreciation. If you are interested in this segment of the market, be prepared for particularly competitive conditions as we move into the second quarter. The luxury market over $2 million is also showing some initial promising signs. After 2 challenging years, we're anticipating stabilization with modest price appreciation of 2 to 3%. But here's what's crucial to understand about this segment. Location will be absolutely critical in 2025. Downtown luxury properties should see a strong performance, while rural properties without vineyards but still close to the amenities of town could be the real sweet spot in this market. However, large vineyard properties may continue to face challenges, and here's why. For many properties, vineyards are actually becoming a liability rather than an asset. And the fact that a significant portion of our purchases are non-primary residences, this means the usual market dynamics of house price affordability, a combination of financing costs, median incomes, and median price points, doesn't necessarily apply here in Healdsburg. Instead, we're seeing decisions driven by lifestyle choices, investment potential, and also obviously the unique appeal of living in wine country. So what does this mean for you? Now let me break down what these market trends mean for both buyers and sellers in 2025. And this is important information when you're considering a primary residence, a second home, or an investment property in Healdsburg. For buyers, the first quarter of 2025 could present a really unique opportunity before the competition heats up in the spring. The luxury segment in particular may offer some interesting negotiating leverage, especially for rural properties. And with the stock market having performed so well over the last few years, for some people, this could be an ideal time to consider real estate diversification in their portfolios. So there are also some excellent value opportunities emerging in the luxury segment, particularly for properties that need updates. But the critical point is that location should be at the forefront of your decision-making process. We're seeing that the proximity to amenities of Healdsburg City is becoming increasingly important to property values and marketabilities, and particularly as people consider this in the context of wildfires. And here's something that every buyer needs to understand about our market, regardless of when you choose to buy. You'll definitely be competing with second home and investment buyers. I mean, Healdsburg continues to attract investment, not just from outside the county, but also from those who already own real estate in Healdsburg. And this dynamic creates a uniquely competitive environment that you definitely need to be prepared for. Now let's talk about what sellers should be considering in 2025. Well, if you own a turnkey property in a prime location, the first and second quarters of 2025 could be your optimal timing. We're seeing a promising combination of interest rates, marginally better than they were at some points last year, and increased inventory that could create a healthy market without excessive competition. However, price positioning will be absolutely crucial this year. The market has become more price sensitive, and we're seeing buyers who are increasingly sophisticated in their analysis of value. This means that strategic updates to position your property as turnkey could make a significant difference for your sale outcome. And here's an interesting fact to consider. The stock market's current strength could actually support buyer confidence, particularly in the luxury segment. But I've got to be honest with you, while all this sounds incredibly promising, there are some factors that we need to watch carefully that could change the balance of the market dynamics. So what are the wildcards for 2025? While our outlook is optimistic for 2025, there are several wildcards that could influence the overall market dynamics. I mean, as your local real estate expert, I want to make sure that you're aware of some of these potential game changers. First, with a new administration, there are going to be some big changes, and this may create some market uncertainty depending on the scale and the impact of these changes. I mean, we're obviously watching this closely, particularly in the luxury segment where discretionary purchases are more common. And then interest rate movements will be another crucial factor to watch. While we're seeing some relief from the higher interest rates of 2024, any significant shifts could impact buyer psychology and purchasing power, whether that's up or down. I mean, this is particularly relevant for our primary purchase buyers in the sub $2 million market. And stock market performance and promised tax cuts could also significantly impact our market, especially given Healdsburg's high percentage of second home, as well as investment buyers. I mean, the other factor which may end up having a significant impact on both the Sonoma County and the Healdsburg markets is the movement of people impacted by the LA wildfires, particularly given the number of luxury homes in places like Palisades and also Malibu. We're also keeping a close eye on the local economic conditions, particularly in the wine industry. I mean, as a wine country destination, Healdsburg real estate market has always been interconnected with the health of our local wineries and tourism and the other industries that are big in Sonoma County. However, and this is important, Healdsburg has proven remarkably resilient through various market cycles. Our enduring appeal as a wine country destination, combined with the strong fundamentals we're seeing in our sub $2 million market, suggests our local market should remain stable regardless of these other potential disruptions. So what's particularly encouraging is the growing preference for turnkey properties in prime locations. And this trend indicates that properly positioned properties should continue to find buyers regardless of the broader market conditions. So what's the big takeaway? Well, 2025 could present a unique window of opportunity in Healdsburg's real estate market. Improved interest rates, increased inventory, and strong underlying demand suggest a more balanced market ahead. However, success will require careful attention to price positioning, property condition, and location. Get these things right, and you'll be well positioned to take advantage of the market opportunities in Healdsburg in 2025. I'd love to have a deeper conversation with you about how these trends might specifically affect your real estate plans, whether you're buying or selling. I mean, our team is #1 team in Sonoma County, having helped clients buy nearly $70 million worth of real estate in 2024. So what sets us apart is our inside access to developers and homes coming to the market, and also the way we market our properties for our clients. If you're already eyeing a Healdsburg home or thinking about selling your home, let's talk about your specific situation and we can talk about how we can maximise it for you. You can reach me directly at david@brewingtonhargreaves.com, or else just give me a call, 415-260-7814. And hey, before you go, if you found this market analysis helpful, you'll definitely want to check out my video linked on the screen below. See you in the next one.